guys, welcome back to the FX Academy, and in this episode we shall be talking about market structure. You should know that 95% of traders lose money in the market. It's not because they are lazy, it's because they don't even understand what type of markets they are trading in. So what happens when they buy, the market just drops, and when they sell, the market just shoots up instead, hence making losses in the market. And slowly their accounts start breeding, hence blowing up those accounts. At this point, they are no longer trading anymore. They're just gambling with the market. And here's the truth, guys. If you do not understand the market type you are trading in, then you are trading blindly. But today that ends. In the next few minutes, I'm going to show you the 3 types of markets every trader must know, and how to instantly recognize them on your charts. And once you see this video or this episode, you never look at the market the same way. But before, guys, we continue, please subscribe to the channel and engage in the comment section so that we grow as a community and these videos are passed out to other brothers of ours that are struggling with the market. So basically, market structure talks about the types of markets that we trade. We have 3 types of markets. We have the bullish or the uptrend, we have the bearish or the downtrend, and we have the sideways or the ranging market. And I should know that you should also know the following abbreviation that we shall be using. We have the BOSS, the breakout structure. We have the MSB, which is called the market structure break. We have the IMB, the imbalance, HH, higher high, LL low, L low, and H high. We shall be seeing all and how to use this abbreviation. So starting with the uptrend or the bullish market, we have this, and this is a bullish market. So a bullish market is just when price generally moves upwards, like prices are generally moving higher and higher. Like this is a market where buyers are in complete control, so making series of higher high and a higher low. You see, you have a higher high, a higher low, a higher high, a higher low, and then we also broke even. So basically, the moment you see that in the market, just know you only look for buying entries. So a series like a higher high is made after breaking a high, so we call this a market structure break or a break of structure. Like when we break a higher high and we close up it, then we create another high. The prices have to come back to create a higher low and then break even to create a higher high. In the later on videos, we shall know when to enter the market. So as long as the market is making series of higher high and higher low, then the market is considered intact, or the trend is considered intact. So you only look for buying entries. Then we also have this version, like the market, when the market is moving in series of higher high, like we have a high, a low, a high, a higher low, a higher high, a higher low. But when prices, let's say prices like here, have failed to break even, what happens? Prices always return. So when they return and instead break the higher low instead of the higher high, yet going downwards via the higher low, then we have what we call a market structure break. As you hear that, a market structure, so the structure is changing from an uptrend, to a downtrend. As you can see, it's changing from an uptrend to a downtrend. Why? It's doing that because from here we see that prices failed to break the swing high or the higher high to make another higher high up. So prices got rejected from here, like from going further, due to market forces. There are always forces that refuse prices from going up, and in the later on videos we shall be seeing them. Forces such as the supply forces or the resistance forces, the imbalances in the market, and many others. So in this zone, there's something that is resisting market from going up. So the moment prices come and break the higher low and we have a market structure break, then the trend is changing into a downtrend. So we say this trend or the uptrend is no longer intact, and we do not expect you as a trader to go for buys anymore. So no longer intact. So the trend is no longer intact, and sellers are now warming to go in for the control. Now, hope you understand the uptrend. We have the downtrend. A downtrend is when price is moving downwards, like generally moving downwards. Sellers are in the control and prices are moving lower, forming series of lower high and lower low. So basically, when you see such a thing, just know sellers are in the control. Like we had a high, prices instead of going up, continuing up to break up, they just moved downwards and broke here. And when they broke, we had a market structure break. So what do prices do when selling? They do not break up, like closing up. They always just form lower high. It's called the lower high because it's a low, but like it's a high but lower than this high. For example, we have a high here. This is called a lower high because this high is lower than this. And this one is called the lower high because this high is also lower than this. This high is also lower than this. This one is a low and this one is a low, but we call this a lower low because it's lower than this low. And this one is also a low, but it's lower than this low, hence calling it a lower low. So the moment we see series of high, lower low, like lower high and lower low, lower high, lower low, and then the market is bearish and we only look for selling entries. So we also have the market here as that. If you see that, only that, let's know that the trend is intact, completely intact. But then we have what we, when like prices fail to break even to form another lower low. Like here now, we had a market structure break. Prices formed the lower high, came from the lower low, went up for a lower high. As the series moves, lucky enough we broke, and had the breakout structure. We broke to form another lower low, and prices went up, like prices went up, formed another lower high. So in coming back, we expected these prices to break and form here another and form there another lower low, but eventually it never happened. So what happened next? There were forces here, and these forces are the surprises, the imbalances, and many others that we shall see in the later on videos. So what happened? Prices just went up and broke the higher high. When they broke the lower high, like the lower high, we had a market structure break, and immediately here buyers are warming to go in, like to control the market once again. Now another thing, we have the sideways or the ranging market, and this is the type of market where the market does not decide whether it's going up or downwards. So instead, prices kept on ranging within a certain high price and a certain lower price. So the moment you see this in the market, like the market is not deciding, then just know that prices, or you as a trader, you gotta stay out of the market. Like prices are not making either higher high or higher low, that's uptrend, or lower high and lower low, that's a downtrend. So it's therefore not recommended to trade, but rather to stay out of the market. Hope you guys understand me. So this is a sample of how a real market will look like on your chart. Like it will combine all the three types of markets, but it's just you as a trader to know where to buy and where to sell. Hope you understand, and where to stay out of the market. So at first we had a downtrend. We had a downtrend, you see. Yeah, we had a downtrend. We had a downtrend, and immediately prices changed into an uptrend. But that doesn't mean that we were selling and then we're buying, that everywhere we buy and selling. There are time in the market we do not trade. For example, we broke here to have a market structure break, and prices made a first break of structure. So what we expected was prices have to go back, form a higher low, and then come and break again to form a lower low. But in the real sense, prices won't, at times, just don't move as you think. Like here, somebody will just say, now the market has failed to break even, we are going up. We only consider another trend or a change in the market structure after breaking the complete lower high. So if prices got rejected here and went up here, maybe if prices manage to break here and go up, then we would say that we had a market structure. But that never happened. So what happened here? Here prices had failed to break even, but later on it was rejected by the supply zones up. We had zones here. So here, as a trader, always be keen on the market structure. Now if somebody just came here and bought because prices have first failed to break here and bought here, then he would be put out of the market or stopped out of the market because of not following the right market structure. So we could only look for buy entries if these prices managed to break up. But since it never managed to break up, and then we had to know that now it's again a sell, and then we had a second break of structure. Immediately the market at times start to range. When the market is ranging here, we do not trade, because why? You enter the trade here and halfway your profit, it comes back and stops you out. Or you sold from here, the same thing. If at all you sold from here, prices, let's say, came and triggered your order, and then they just went up and stopped you out. So basically, in the ranging market, you can be stopped out at any time. So you do not need to trade when you see the market that is ranging. Now, prices came down here and it failed to break even. So what should we do? If it fails to break even, you do not enter immediately. We wait to see a perfect break or market structure break. So here we had to wait, and it did. We had to wait until the market broke and closed up this high. So when it did that, then the market had changed. We could only wait for a simple retest, making a higher low, then we enter our moves and trade. So if somebody just entered here, that will be a risky trade. Why? because you do not know whether the market will be broken up or not. So basically, that's how we trade. Here we have another ranging market. So whenever you see a market is ranging, like it's sideways, so just stay out of the market because you do not know where the market is going. So basically, that's what we call a market structure. Let's go to the charts and see how the real market is. Okay guys, now this is a chart of GBP USD, and this is an uptrend, an example of an uptrend. Now here we had our first market structure break, and how do we mark this? At times people mark wick. You can mark wick or a body. Why do we mark bodies? Because it's where price closed. So I would prefer us be marking bodies. So that was our first market structure break. Like this was a market structure break, and basically, so after having this market structure break, we had to wait. Why do I say that it was a market structure break? We do not consider this as a break. Like from here to here, it wasn't a break. Why? Because prices never broke this high from here. It came back, like retested. Maybe it could have gone further to make a lower low, because it's a low, but it never did that. So as a trader, what do? You do not enter from here, because the market structure break is only valid when prices broke and closed up like that. Now after these prices break and closing from there, then we had a valid market structure break, forming a higher high. So after us forming a higher high, we know the series of a bullish trend. We must form a lower low. When us forming a lower low, the first low was this. So we had a low, we had a higher high, because this was a high, this was the high, and then we had a lower low, like we had a higher high and then a lower low. So after us seeing those series, we know that the market is bullish and it is intact. So what happens next? We had a break of structure. Now us after having a break of structure there, prices moved up. Like after breaking here, it had to make a higher high. Then after making a higher high, we do not enter after prices close above this. We wait for a pullback to form a lower low, and then we go up, forming another break of structure. So we had another break of structure here, and then after us having another break of structure, that means if we have a break of structure, we broke in a high, and when we break a high, we expect another higher high. Then after us having a higher high, we wait for prices to make a lower low. Now this is where the market changed. Now us after having this, we expect a lower low, but when we look closely, prices came like okay we expected these prices to come and maybe make a higher low, and then continue upwards to break even, which never happened. So what happened really? That the thing that happened, prices kept on dropping downwards. Like prices kept on dropping downwards, hence breaking our lower high, like higher low, our higher low. So when it broke this, then we had a valid another market structure. And since prices have broken this, then I do not expect you as a trader to think of any buying thing, like having a buying idea here. The only stuff that we would look for, you would wait till prices make a low, like start to reverse upwards. When prices started to reverse upwards, from here, this, then you can mark this as your lower low. So we wait. So the only stuff that we want to see, we don't want to see prices breaking here. So we just want something that will be lower than this high, so making a higher low, a lower high. Now us making a lower high here, we know very well prices will come and break here, giving us a break of structure. Now after us seeing such a thing, like we had a market structure break, and now we had a market structure break, we had a lower low, and then not only that, we had a lower high. Then immediately we know that we have to sell this move. In the later on videos, we shall see how we enter these trades, like the confirmation we need to enter and where to enter from, like how to enter from, like where to enter from, the discounted and the premium zones for us to take a trade. So what happened? Prices came here and made another, lower low, which is good. Okay, so what we wanted, all we wanted was these prices to go up, maybe up to here, and then return to make another lower low, breaking this structure, but that stuff never happened. So what happened really? Prices continued upwards. Maybe they would have ended from here, because this was the level. Like maybe prices would, okay, no way we would trade this, like to think of buying or doing anything, not until we broke here. But if prices came here and got rejected, we would continue to sell. But here we see that prices broke, like prices came from here and broke this stuff up to here. So when it broke that stuff, we had a market structure break. So the moment you have a market structure break, immediately just know that now the government is changing. Like we've been selling, now buyers are coming into control. However, after doing this, we wait to form a what? A higher high. After forming that, you do not enter immediately. Wait for prices to come and make the series of an uptrend, which is a low, a higher low. Now, after us having a higher low, then immediately we know that the trend is bullish. The trend is what? Is bullish. So another example is the ranging market. Let's look for the ranging market and see how we we go with that. Now, the ranging market is here. We see that prices took time, like prices ranged from there and here. Prices were ranging. So all this from there, like all this from here, like we never had to trade, not until prices break. We shall see how to trade these ranging markets in the nearby future, because these are also great opportunities when prices break either the supply zone, this is the supply zone, or the support zone or the demand zone. So basically, guys, this has been our episode of market structure, and hopefully you understood the concept. Please subscribe and engage so that we grow this community as one. Thank you for watching.